All right, we'll continue, finish chapter 5 here, talking about a little bit about homeowners insurance. Again, there are basic kinds of insurance. You know, you can get insurance for your house, on the house itself, on the personal property within the house. You can have liability coverage to cover damage essentially to others, and you can also cover medical payments that's caused obviously to other people if they get hurt on your property, etc. The standard homeowners policy is a package deal. It incorporates all of those things. So again, let's kind of work through this process. You could possibly get co-insurance. The typical rule is that it's the rule of 80. So you figure out the required coverage, use the rule of 80, 80% essentially covered. The deductible then is you calculate the recovery percentage. You calculate then this loss recovery, the loss times the recovery percentage, less the deductible, and that's the amount of insurance that you ultimately have on your home. So again, the calculation typically isn't for 100%. However, you can purchase replacement insurance. We'll talk about that briefly here in a second. But the HO policy, the homeowner's policy, comes in a couple of forms. You have the broad form and you have the special form. This essentially refers to the risks that you're insured for. So the broad form says you're covered for fire and lightning. Things they're referred to as wars. You know, windstorms, hail, riots, vehicles that may hit your house, smoke, falling objects, volcanoes. Special form insurance, though, requires additional parts. If you want flood insurance, your house is not covered. Now, what is that exactly is referred to as a flood? I mean, if you're near a flood basin, then obviously you need to have that extra insurance because the chance of a flood is extremely high. For other folks, a flood necessarily isn't all that likely to occur, so you don't have to worry about that kind of insurance. That's why it's in this special form. We could talk about the different policies themselves. Again, these refer to the things it covered. HO2 is the broad form. HO3 covers one of those special forms, right? HO4 helps cover additional contents that are in this broad form. It's an additional piece. HO5 is going to be a comprehensive form. It covers all the forms, not the special forms, but the contents and the broad form. You can also buy coverage for condo owners. For older homes, you can buy certain kinds of coverage. You can even buy rental coverage, right? So if you're a renter, you can buy insurance to cover rental property. Obviously not that you own, but that you are living in, right? The different coverages. It covers dwellings, other structures on the property, personal property, loss of use, right? If you have if your house has some fire damage, you can't live there for a while. Who covers the cost if you have to leave somewhere else? That insurance is in place with inside a policy. Who's covered under personal liability? Likewise with medical payments. So again, the different forms. Again, these forms are in your textbook. You can look down through and see what kinds of things are covered. You know, whether it's covered in a special form or not special form. Again, I don't want to go down through that list, but I think it's important for you to kind of work your way down through and see, you know, exactly how, which kind of policy or type of form is going to cover property. Obviously, down here we have the, you know, they talk a little bit more about the collapse of a building, landslide, earthquake. I mean, who's covering this? I mean, if you look, landslides and earthquakes are no, right? They're not covered by the broad form, right? Not even covered by a special form, right? It has to be by a specific kind of endorsement. That means you have to have it written in the contract that those things are covered. I would wager to say that there are a lot of insurance policies written in California that have landslides and earthquake things written into their policies. What's covered under the various types of policies, what accents, what are the risks down here that are referred to as the covered perils. So it gives you, identifies what exact things are covered under each form. What's the definition of insured? How do you actually define your home? What's the location of the home? Unscheduled personal property, how is that covered? Right? What is the market value? Is it the market value? Is it the actual value? Or is it the replacement cost? Right? So is it the actual value would be more like the depreciated value versus what it costs to actually replace the asset. A variety of different kinds of endorsements that you can get. Again, endorsements are write-ins, different things that are written into the policy to cover things that you may want to have covered. Backup for sewers and drains isn't in most policies. You need to place that in there. Personal property replacement cost, right? Maybe they replace the value, but they don't replace the replacement cost. So you want that to be incorporated. What happens if you use your home for business? That has to be incorporated into this plan because the home is a residence, not a business. The other special kinds of insurances that you can think of. Lots of these things fit into a broad range of special forms. One of the things that I might add that I really don't quite understand why is here, but it's referred to as this private mortgage insurance. Private mortgage insurance is what you typically pay when you buy a house for less than 20% down. The challenge is it's not your insurance; it's insurance for the bank. So I'm not really sure why that's in there, but these are all different types of specialty forms that reside within things that you can buy. I mean, insurance on watercraft. I mean, if you have car insurance, do you have insurance on a boat? Right? Obviously, you should. You need to buy that kind of insurance if you have a boat. Right? So again, if it's a fire, right? What things are covered? You need to consider certain things. So the other question is, do you have these things though? These are the things you need to consider. These are the things that says, do you have these things? Right? Do we have to cover them? Do they need to be covered by special kinds of insurance? For B, here's the policy, the status of the insured. Again, for Form B, right, it's the homeowner's policy status, right? What's the date? Where's the house? What are the deductibles? Well, this essentially is the front page, if you will, of what things are covered and what things are not covered. And down below you see the ultimate value. How do we figure out the cost of the policy? Moving on then to talk about car insurance, right? Obviously we're talking about those damages resulting from some kind of auto insurance, right? Property damage obviously is incorporated there. Bodily injury is the other side, right? So the major components, we need to have some liability coverage, cover us for damages, for potential negligence that we may have committed. We need to cover medical payments. In most states, you need to have uninsured motorist insurance because frequently people don't have insurance. And who pays the insurance? If the person hits you, they should pay, but they don't have insurance. So you have to have insurance to cover that. Coverage for damage to the insured's car, your car, right? Again, what happens after the accident? It could be general provisions that are compensated for. So again, summaries of basic automobile insurance. Who ultimately pays, right? For bodily injury. If there's bodily injury liability, does the policyholder pay for that or other people? Other people pay for this if you're hit, right? Medical payments, it covers. Protection against uninsured, yes, it covers. So now we have talked about, again, in general terms, when you buy insurance, you have to consider all of those pieces, all of those things that you need to have covered. And again, each piece, each component is identified. Part A, Part B, Part C. All of these are identified within the scope of the contract. So obviously you need to understand what is covered under each one of these parts. Every insurance policy is the same. Everything is A, B, C, D, E, F. Everything is identical. At the bottom, you should see some identification in your contract is what factors ultimately affected the premiums. Are there additional things that may affect it, right? What things, in general, it's people like to steal your kind of car, so that's going to cost you a little bit more. Guess what? You had seven DUIs. If you get insurance, that's going to affect it, obviously. I think more like, you had 3 or 4 accidents in the last 3 years. That's going to impact your coverage. So, what is what's typically identified as no-fault insurance? Not every state has this, right? But the accident victims' losses should be covered by their insurance company, right? The right to sue for additional compensation is limited. So once you're compensated, you're compensated. You can't get more money than what is paid out by the insurance company. So in some states, no-fault insurance is mandatory. You got to have it. Insurance companies must provide safeguards against cancellations and non-renewals. So they have to incorporate that into it. Some companies have actually even adopted a different form of this. It's add-on no-fault insurance. So there's a piece that's incorporated into this, an additional piece. Oops, excuse me. An additional piece is incorporated into this. So, again, what types of insurance do we have? We've talked about liability. We've talked about medical payments, covering for uninsured or underinsured motorists, payment for physical damage. Those are the types of insurance that you want to be incorporated into your car insurance. The last piece of insurance is something referred to as umbrella liability insurance, right? So what is the need? I mean, the need for here actually covers things that really don't come from homeowners. It doesn't come from car insurance. This could be liability insurance. If you do damage to another person, you could have a policy. I mean, frequently we refer to the need for this would be professionals, right? If you're an accountant, if you are a doctor or a lawyer, right? You need to have this additional form of coverage to cover you for things that you do in addition to the damages. So, you were in a car wreck and it was your fault and you get sued. Well, the insurance company pays what they have to pay, but let's say you get sued for $10 million because the person died and that's the damages. Well, this liability coverage covers a certain piece in the car insurance, but then there could be additional insurance on top of that. So it could cover the liability judgments, could help cover some of the costs of defense, but it's additional coverage on top of the rest. And again, I'd already mentioned this, there's professional liability insurance, there's malpractice insurance. There are a variety of different forms of this insurance that ultimately cover things that you do that are wrong, that injure another person, but aren't damage to property per se. That's the end of Chapter 5.